hear me? Perfect. Thank you so much. Thank you to the U.S.-Mexico Foundation for having us here. Thanks to the North Capital Forum. It's a great setting. We realize that we are right after lunch. So, one of our biggest challenges right now is to wake you up and make this as engaging and as attractive as possible with the conversation. But more importantly, thank you to this VIP panel that I have here today to discuss this topic. Before we get started here, I'd love for each one of you to introduce yourselves, talk about yourself, talk about your company, and talk about the problem that you are solving in the market. And just to give you a little bit of context, many of the folks around here are not very familiar with venture capital. We'll get into that in more detail right now. But one of the things that are very important about venture capital is the ability to tackle problems, to solve problems that under traditional ways or at traditional capital would be really hard to solve. So just for the audience and for context, it will be great if we can start it around. Hayden, would you mind introducing yourself and starting here?
Yeah, absolutely. So I'm Hayden. I'm a co-founder and CEO at a company called Fraction. We're about 4 years old and launched about 18 months ago. We're essentially a home equity lending platform that's fully digital. We own everything from essentially when you apply from an application to selling the debt on the back end. Basically what we did was we came up with a new type of mortgage product where there's no monthly payments and homeowners can access that home equity and use it for a variety of things. So paying down existing debt or buying long-term healthcare insurance, it really gives them more control over that asset. To date, we've raised about $800 million in debt, about $50 million in venture capital. That's me.
Yeah.
Welcome, Hayden. Barb?
Well, first of all, thank you for the invite, Fed, and thank you to the forum for having us here and opening the floor for a discussion like ours, where we're going to speak about the benefits of the venture capital industry and how much, at least hopefully we can share some of our experience and actually transmit the message of how helpful it has been. My name is González Briseño. I am the CFO and Mexico CEO for BITSO. BITSO is the largest cryptocurrency platform in Latin America. We are, by volume, more than 15 times the largest exchange, and we have operations in Mexico, Colombia, Brazil, Argentina, and we are part of the liquidity sources of El Salvador. And basically, the reason of existence of BITSO itself is because we realized that the Mexican population, it started in Mexico, the Mexican population had been basically subject to century-long control of the banking system, right? Yep. 10 years ago, we didn't have a fintech ecosystem in the country, even in many countries of the region neither. And there was no disruption, no innovation. There were very little incentive for people with amazing ideas and projects to come forth and try to go and tackle the authorities on their own and try to challenge the incumbents with their products or services, because it was really hard. There was not even legislation that allowed that. And as the fintech movement started happening and several of these amazing minds came together and started pushing for legislation, we also realized that there was an opportunity of what we were going to build on top of the best technology out there, which happened to be the nascent crypto technology. So today, our objective is basically trying to solve a lot of the pain points and frictions that the user has with the current financial system, and offer products and services on top of crypto that actually are more efficient, that are cheaper, and that are easier to interact with. And we'll talk a little about these use cases, but we're actually trying to solve the problems for the end user, and also at the same time increasing availability of these products and services, because the banking industry did not necessarily go to everyone, right? Like it was, they're attacking just a niche of the population, and we're trying to build something that is actually for all.
And you're talking about Mexico in particular, but the company is actually borderless. Can you talk about where else you are?
Yes, of course. I think that different countries in Latin America are very different. I think that we often lump everything together and say, oh, Latin America is one region, everything is the same. And the problems and challenges are completely different. In Argentina, we have a population that sees depreciation of their currency and devaluation every single year. That has made the people afraid of even interacting with the bank. Like, they don't want to hold money in the bank. There's capital controls, and there's like problems there that we're trying to tackle through crypto that are just so much more efficient, and we're giving freedom back to the users. So, for example, in Argentina, a user today can now hold like all of their funds in our platform and dollarize them the moment that they get the funds, so they no longer have the currency exposure. They can earn interest on those funds, no longer having the impact of inflation. And then now, like with our QR payment integration, they can go and spend it on every single place in the country. So you were connecting all the dots of like the value proposition of what a financial services company is for the user, but all of these use cases are built on top of crypto. So basically, this is like a pain point for Argentina, but Brazil is different, and Colombia is different. Colombia, right now, we're seeing a lot of adoption of USD denominated money, because like with the political instability that the country is going through, people want to diversify their holdings. So we're seeing different countries require different solutions, but all of them are built on top of a democratic, borderless and global system, which is the crypto and blockchain ecosystem.
Fascinating, fascinating. Thank you. Ryan?
Yeah, so first off, thank you very much to the US-Mexico Foundation for hosting this event, and it's a pleasure and honor to be here with everyone. My name is Ryan Croft. I'm the co-founder and CEO of a company called PACTO. We are a US and Mexico-based platform, vertically integrated software company, similar to Toast for Latin America, for those that are familiar with Toast. We effectively enable small merchants, restaurants, and bars to run their business digitally and then accept digital payments with large acquirers. So I'm a serial entrepreneur, and I've been cross-border for about 15 years, and I work at Georgetown University as an entrepreneur in residence and angel investor.
Excellent. Welcome. Jordi?
Yes, thank you for the invitation. Pleasure sharing the panel with you guys. I'm representing maybe the more classic type of capital in this table. I'm representing CDPQ, is Caisse de dépôt et placement de Québec. It's a pension fund from Quebec. We, as a pension fund, our exposure normally is, less early stages. But said that, we have, I would say, now I was taking a look at the numbers, and in total we may have like 6 billion invested in VC type of portfolios out of 400 billion. So it's still relatively small, in relative terms it's small, but starts to be a significant presence. That said, it's investments we do more up north, where we have stronger teams and capabilities in Montreal. Our headquarters is in Montreal. But I think one of the ideas of starting there is just to get closer to everywhere else we are, and Mexico is an example. And more I see this angle for us, also related to the north-south, south-north flows. We like this thematic as an investment thesis. Actually, we do have companies invested companies in the US that rely strongly on capabilities uniquely placed in Mexico. For example, talent engineering. We have those examples, and that's one of the parts. So trying to bring these thematics to the region is one of the future, I hope, short-term future goals for us. That's one part of the way we see it. The other part is, I think, and Mexico is really unbelievable how in, I may be wrong, you guys are more familiar with that, but in maybe 5 years, the tech and VC ecosystem is booming, right, and attracting a lot of capital. So this means that unicorns now, the term of unicorn is relative, but it shows maybe it's a sign of maturity of these ecosystems, and you can count now like maybe you have 4 or 5 already in Mexico. This means opportunity for us at the early stage, and an exit for the investors that deployed the equity in early stages. So that's the other way we see, and why we need to be closer to this VC ecosystem as an exit way, and also eventually as a direct investors when we come down from our experiences in up north.
So in other words, VC is basically the supplier of good companies to your company.
Exactly. That's
private equity. It's a good way to put it.
That's
Is that right?
You guys need to, do the right things, and we'll be there.
That's very good. Good to hear. You guys heard that, right?
Yeah.
Excellent. So let me just give a little bit of context for the benefit of the audience on myself and the reason I'm hosting this event. I'm Fernando González. I consider myself a tech entrepreneur. I've been in technology my entire life, most of it actually in the U.S. First with a company called MicroStrategies, now publicly traded. I got to see the whole evolution from almost nothing to a publicly traded company. Got an opportunity to build a business that sold to Facebook, another one to Adobe. And then I joined the venture capital world. I was actually very skeptical at the beginning of being an investor, but I found myself with a great group of folks who were also being called investors, but also have a similar type background as myself, as former operators. And these guys are who QED is today. Nigel Morris, who co-founded Capital One and ran Capital One for many years, is the founder of QED with Frank and a few other of my partners who are currently with QED. Full disclosure, we are investors of two of the companies that are represented here, BITSO and Fraction in Canada. Obviously, Ryan is in the same space and definitely one of the companies that we're considering, and we are colleagues in the industry. That's sort of the general context here. I wear two hats. I'm also the CEO and founder of one of the portfolio companies. It's called Koru. It's a free financial coach for everyone. It's a thesis that is very well known by QED. We invested under that thesis in Credit Karma, which is one of the first exits for QED. We've invested in a similar thesis in the UK. This is a play for emerging markets, right? So the fundamental notion is that most of the people are constantly stressed about money, the ones that have and the ones that don't have, and to the extent that we can empower them with knowledge and we can do it on a constant basis, we can help them through their financial lives. And we do that digitally through artificial intelligence so that we can scale to millions of people. We're in Mexico, obviously. We're also in Brazil now. And so that's kind of my other hat. But right now, going back to the VC space, some of you may not have the history. I'm sure all of you do. But VC has been around for roughly 40, 50 years, right? Like it started in the mid-80s. Exactly. It started in the mid-70s. Many of the most valuable companies that we see today were the first generation of VC-backed companies like Microsoft itself, Apple, FedEx, Entertainment Arts, so EA. The second wave was like the 2000 wave, right? Like the dot-com era, which was all about internet access, and many of today's companies like Google itself, Amazon, Netflix, PayPal, Salesforce.com were born in that era. Despite the downturn that happened when the bubble burst in the 2000s. And the third era is probably the companies that are most close to us right now, to us building this new venture capital ecosystem, like Uber, Airbnb, Facebook, etc. Right? So this is not a new thing, but it's kind of new to Latin America. I mean, to Latin America and to Mexico in particular. It started maybe in 2010, 2012, when the first micro venture capitalists started investing in companies, but with very small checks and with more of a spread and pray type thesis, right? Like basically every single company will get a little bit of money and then go and run and build those companies. But in recent years, the amount of capital that has been flowing into the region is increased tremendously. Last year in 2021, we hit a peak. Mexico itself received $3.5 billion. Latin America, $15 billion. That's double the amount of money that was invested. This is not QED itself, but we were a good chunk of that. But it was double the amount of money that was invested in 2020, right? Like, so there's clearly something going on. Right, like, but for all this money to be poured into companies like yours to make things happen. In your opinion, what is it about VC? What is VC good for? Why does that matter in a business like yours to solve the problems that you described earlier? Who wants to start?
I can start. I'll break down kind of, I guess, a few things. So VC, I think, is a rather general term in terms of the stages that you're looking at and where they're investing and what's important. And so you have pre-seed companies which may not have a product. They might have some beginning of a product. They typically don't have a lot of customers. They typically don't have a lot of revenue. That's typically funded by like angels. So that might be people who've had an exit before are putting money into companies that they know. There's been some institutional investors that have gotten into the pre-seed stage or angel round money, but it's really built through the ecosystem itself of ex-founders, ex-employees putting money in. So as an example, one of the founders of BITSO is on our cap table, invested early. We have almost the entire executive team from Brex, which obviously the founders come from Brazil, on our cap table as well. And so what that allows you to do is get started because they kind of understand what you're doing, what it takes. And then you kind of get into seed capital, which typically those companies have a product in place. They have some sort of revenue and they're seeing product market fit, which means that they're kind of growing exponentially. You can see that things are working. And that's where like a group like QED will start to enter typically. Those valuations are typically in like the $12 to $15 million range. Check sizes are typically like $3 to $4 million. Now there's some outliers with founders that have like exited before and stuff like that, but generally that's where you're at. And then you have Series A companies, and that can kind of put into a group of like called early stage investors. So like QED would still participate at that level through their early stage fund. Those companies typically have, let's say, like $1 million in revenue, might be like 15 to 25 employees, and are looking to grow. And so that's when that next kind of chunk of capital comes in. And those rounds right now are like typically $12 to $20 million. And then you kind of get later into growth stage. So for instance, like where our company is at right now, we're at about $8 million in revenue. We run rate a year, we'll do about 36 next year. And that's when you start getting into growth capital. And that becomes much more professional investing. And so it becomes much less about the story, but the story is important, but much more about the numbers in terms of what do the public markets look like, what are public comps going to be. And as you kind of get later and later stage, those public comps become more and more important. And so if you're looking even right now at what has happened in the public markets, you're seeing late stage funding drop off because the problem is that these companies raised at valuations that were representative of 21 values and need to take a down round, and that becomes really, really difficult. And so I guess the other question then is like, what are VCs looking for? Like what are VC backable companies? And obviously I'd love for you guys to jump into. But I think the biggest thing is like the difference between a lifestyle business and a business that can scale. And so what that really means is you need a path to be able to be making hundreds of millions of dollars of revenue when you go public, right? At margins that get better over time. And so you have to be able to tell that story of how you're going to get there, even if it's a pretty big stretch. Then you'd be able to see that possibility. I think you see like a lot of SaaS investing right now. That's pretty much getting commoditized. Like the understanding of what those metrics need to be, what they are. That's becoming pretty easily to get invested now, or pretty easable. But then you get into the like more esoteric stuff. So like our company, which has a balance sheet lending, there's only like a few venture funds that can do that, like QED. I'm sure you guys have the kind of the same group in terms of the crypto side, right? But you need to see that technology is a big piece of that, because that leverage in terms of not having to hire linearly the amount of people for the amount of dollars that you make is super important to get the multiples that you need to be able to get the returns that investors have. We'll hand it off.
Yeah.
You want to add to that, Barb?
Yeah, maybe I loved how you were walking us through like the different stages. Like if we see our reality, we interact with a lot of companies on our day-to-day. Like a lot of the solutions that are normal to our lives, all from the technology that we use with our phones, the apps that we use now. Like it goes to the health, to the real estate market. Like there's a lot of companies, but we don't. It's rare that we stop and think like, how does this come about? Like, where does this start? Like I'm a consumer of all these things, but usually like there's a seed that was planted first, and it required a few set of individuals who took a risk to drop everything that they had, probably quit their jobs, probably forgo like a salary and say like, I want to solve a problem. It all starts with wanting to solve a problem. right? So like these individuals, like they decide that they have identified the problem and they want to find the most creative solution that's going to like bring value to people across their geographies that they're going to serve. And most likely, it's going to be very hard at the beginning because you have absolutely zero funds to operate your idea or to even brainstorm your idea. You are on your own. You're not an expert on every single front that you're going to tackle on your company. And as like you're in this like very ideating first stage, you need someone to come and back you and say like, okay, I'm going to help you pay the bill so you can like eat every day, right? I'm going to help you get a roof over your head. It doesn't have to be a fancy roof, but just like to get a roof and a bed. And I'm probably going to hold your hand and tell you like, okay, this is how a tax structure should look like for you. Right. This is more efficient for a company like yours where in the problem they're trying to solve. Or someone who can tell you like, I'm going to introduce you to someone who can very easily integrate to your story, and then you can find synergies or like talent to bring to your company. Like I'm going to find another crazy person who is willing to forego their salary and quit their jobs and come and join forces to try to solve your problem, right? So for me, I think there's a huge value in the VC industry. Of course, the different stages, because they're like the first believers on these crazy people who are trying to change the world. Yeah. And it's very valuable when you're that crazy person to know that someone is like trusting you with either their help, their time, their funds, and say like, I believe that you're actually going to change the world. Because you probably don't have much to show for it yet. You don't have the numbers, you don't have the traction, like you don't even know if you are like 4 pivots away from your like true value proposition. But it's a very strong companion, and a lot of these projects in the majority of times are very different to a companies that have been here for a long time, in particular in places like Latin America, where many are like family run, many are like government integrated, or like have a lot of like relation. These are companies that are like trying to get bootstrapped and that are trying to really address solutions that go directly to consumers and directly to a population. Yeah. So there's very noble missions there.
I love the fact that you've both drank the QED Kool-Aid.
So now let's
yeah, I can't say anything bad. So.
No, but that's a very good point. And one of the things that is obviously very clear about venture capital is that it's capital that accepts much more risk.
Mm-hmm. Yeah.
Right? Because understanding the problem does not mean that you have a business, right? Like it means that you understand the problem. And what we look for is someone that can articulate that problem very clearly and that knows that problem intimately, that also has a good hypothesis on a solution to that problem, and then can recruit people, can attract people that are talented enough to go and make that happen, right? Because there's a lot of execution risk in all those problems and solutions, right? And then on top of it, you need to understand the basic unit economics, right? Like we always talk at QED about unit economics. How much does it cost to get a customer? How much can you get from that customer? If it works at a small scale, it's likely to work later, and eventually you're going to surpass all these overhead costs and become a profitable company. And that's where the risk starts mitigating. That's basically the function. And then if you add to that what you just articulated, Barb, of being a companion, being an expert. In our case, all we do is fintech. We live and breathe fintech, mm-hmm. right? Like, so we can help with capital markets, we can help with risk, we can help with, okay, now you need to lay off people, right? Like, it's really hard. Yeah. How do you do it? And it happens all the time, right? Like, so that is I love to see that we're still on the same page. Yeah. What's your take, Ryan?
I think I could just take a slightly different angle on it. I thought the two of you really kind of articulated the what, or at least like the stages of venture capital, and then the why. Like, why would you raise capital? What are venture capitalists or what are investors going to do to help you? Another angle that I always think about it is like the types of capital, right? So first being an accelerator in the very earliest stage. They're a type of venture capital. They're a type of investor. Y Combinator is the most famous, 500 startups, Techstars, et cetera. Then you have angels, and I feel like there's been an explosion in angels in Latin America. Yep. People that have had some success or an exit in market, outside of market, who say, I believe in this and I'll put a 25K check. Generally it's around that size, say 20 to 100K. Another asset class that seems to be growing is corporate venture capital. So
why do you think there's such an explosion of angels and kind of individual money flowing into the market?
I think it's this turnover of success, and that whenever one company raises or you have some secondary liquidity or primary liquidity or an IPO, people see that they have the DNA to get there another time, and they want to spread their capital around. I mean, I'm sure other people have different theories on it, but I saw this when I was living in San Francisco. Angels are on every block. You can meet someone in a coffee shop that wants to put $25K in your company. I saw it even in Washington, D.C. I was there during like the Living Social boom and a lot of those successful stories. Living Social guy back here. A lot of these stories sort of turned into the next success story in those markets, or Groupon in Chicago or other markets. Corporate venture capital, probably later stage, most cases, they can bring distribution or specific knowledge. We took capital from FEMSA Ventures, very large Mexican corporation that have a pretty smart theory on venture. Salesforce Ventures, a lot of other famous ones in the US. Family offices have emerged in a new way, I think, beyond just being LPs and funds. They're trying to get more active and invest directly in early stage, mid stage, late stage growth. And then even something called venture debt, which I didn't really know about 5-10 years ago. The concept that you can take revenue and cash flows and then use that in a non-dilutive way. So I always try to remind people that venture capital is one way to raise money for your company. But there's actually a lot. There's a half dozen or a dozen ways that you can finance the growth, and some are better than others. It just kind of depends on each individual situation.
Yeah, I mean, I don't know if you have a different take, Jordi.
No, I think it's mostly been said. There are two things that maybe it's, one is we need to be aware and we need to be careful, which is one of the reasons why I think booming among different regions is liquidity.
Liquidity.
And that's something that it's been a fact over the last few years, and people, even funds migrating from one strategy to another strategy to avoid certain risks in the region particularly. You gotta have FX, you were commenting, non-growth, all this. You go to tech, you tech VC, you grow at 50% per year, not a problem, right? So what's going to happen with that? That's maybe something we could debate, right? Because this is, but the second one is, and I think this is from our view, which is later stage capital, is very important in the region and what's happening, is that it seems that this ecosystem is already here, right? And it attracted, capital from everywhere. It's not if it's Mexico, it's wherever. It's ecosystems that growing, and then they're approaching. And particularly in the region, I think there's an angle that a lot of investors see and evaluate, which is that I don't know what's the percentage, but it's a very high percentage of investments and initiatives and problems to solve that you're saying, that it goes even beyond that, because it's in the US, informality doesn't exist, right?
Right.
In Mexico, in Brazil,
it's all over. Correct.
And all these tools, guys, you're putting in place, what it's doing is creating markets. So I think there's examples. Kavak is an example.
Yep.
It was a market that wasn't accessible for any kind of capital because the way it was structured. With technology and way, you put the tools, and all of a sudden you have 5 competitors. You're creating markets, right? You are a similar example. You are I use your account. I use your account. Not a lot because I'm scared about these things, but the fact that you need to register, you need to have a certain, the guy immediately had access to that, but it becomes part of the system somehow, right? Yeah. Same your clients, right? So this is extremely important, because these industries that, from our point of view, as a later stage, we cannot invest in restaurants because there's 3 chains. We cannot, and it's because of informality. So I think this ecosystem will be also boosted by this, because we can see how from a solution, not only you address that problem, not only you address that issue, but you create a market in 5 years. Wow. Right?
Not only that, I think there's a lot of infrastructural layers of the market that are being built that will generate GDP in the future, right? Like I love the example of Kavak. We're also investors of Kavak.
That's why I said.
Thank you. Yeah, I mean, so most people think Kavak is a marketplace for buying and selling cars, and while that is true, there are like 6 other businesses underneath, right? And Carvana is probably the closest comparable in the U.S. And 4 or 5 of those in the U.S. already exist. They are tapping into layers of the industry that already exist. And Kavak has had to build those businesses vertically in order to operate. Same thing happens with BITSO. Nubank had the same challenge in Brazil, right? Like they had to build the entire banking core from the ground up in order to issue credit cards, right? Like, so all these innovation, well, it's right now being captured by a few of the companies that were VC backed, is creating a lot of innovation on their other layers that others are going to start kind of building up on.
If you look at the General Atlantic, I believe it's General Atlantic comes out with this annual report of digitization. I think last year, the most recent numbers of the entire GDP in the United States, 51% is digital. When you compare that to Latin America or Mexico,
51% is what? I'm sorry.
Is digital.
Is digital.
Companies that are digital, right? 51%. Or digital technology. Whereas it's 3% in Latin America. And to me, that is the most striking observation. I think China and India are somewhere in the 10 to 20%. So even, sure, if Latin America is not going to be 51%, if you triple, quadruple, 10x the amount of digital services and technology that runs every day, from healthcare to government services and financial services, transportation, everything needs to be digitized in this region over time. And the question is not if, it's how fast.
Right. Yeah, so basically what you're saying is that there's a technological or digital deficit in the country that even if we close it to comparables of India or China, then we're doing a 10x on GDP, right? Like, so there's a massive opportunity in technology that is starting with all these companies. And I want to think that is because VC is willing to take the risk.
It's definitely a piece of it. And I think, just to your point, to finish it, because I think Hayden had a point, many of these businesses just simply cannot be built without venture capital. There's too much of a upfront cost, too much of an ongoing cost before you start generating revenue. Venture capital is needed to make these businesses fly.
Yeah. Would you be able to, or would you have been able to build your business, Hayden, if you had traditional money behind and not venture capital money?
I mean, like, we needed $3 million in our bank account just to put out our first loan. So just from the requirement from our, like, the banking partners that we had as a minimum cash amount. So it would have, like, been impossible without venture capital, or unless they maybe had like a rich uncle.
And you're solving a problem that is way more tangible, right? You're in Canada giving people access to equity in their homes.
Yeah.
So from a problem perspective, that is sort of in the realm of what banking can do.
Yeah.
However, the way you do it is different.
Yeah, so we came up with a unique mortgage product where the rate of the loan is based on the change in value of the home. So it acts a lot like equity, but it's structured like debt. And so from a banking perspective, once you get outside of kind of the boxes that they understand, it becomes really, really difficult. And so we were able to do that and been able to take advantage of that. So now we're in Canada and the US. I think one thing that Canada, so obviously I'm speaking from a founder's perspective and being Canadian, I think one thing that both Mexico and Canada have in common is that when you think of venture capital, you think of US investors, typically. And even like pre-COVID, maybe like a year or two pre-COVID, unless you were in the San Francisco Bay Area and maybe a couple other select markets, it was really hard to get venture capital investment, right? Like, you had to fly into San Francisco. The next question for you is like, when are you entering the US market and when are you like moving to San Francisco? And that all really changed during COVID. I don't know if you guys noticed this too, but US investors are looking to put money into places outside of the US, especially as US valuations kind of skyrocketed, and they saw better opportunity for returns elsewhere. So if you look at Mexico, obviously you have a growing population that's extremely young. As you mentioned, there's just a ton of opportunity to digitalize things and take advantage of those opportunities. But in a market like the US, which is so established, like, you have to go to that whole nother next level, which requires obviously a lot more capital. And so I think that's a huge opportunity for Mexico, and we're seeing it in Canada too, where we have a different problem, which is we have a smaller market, but it has a pretty stable regulatory framework.
Yeah.
But it makes investing for different reasons harder. And so we're seeing the inflow of capital that way too. And so I think that's a really big opportunity for Mexico and for Canada in terms of the U.S. investor outreach. I think the other thing that maybe like I wanted to touch on, I've heard a lot of people complaining about how hard it is to raise capital.
That's the elephant in the room.
Yeah. And yeah, like the reality is, yeah, it's like really hard. Like we were having a conversation before we got here. Like I have a running list of 450 institutional and VC investors that have shut us down either for debt or equity. It just is what it is, and like you have to develop a pretty thick skin. It's not easy for anybody. I mean, there's some founders that have had exits that have like earned the right to be able to raise money from whoever they want pretty quickly, but that is not like the kind of par for the course. And I think the other piece of that is it's really easy to read headlines and think everyone's raising money. I can tell you for every headline you see in TechCrunch or on like some publication, there's 10 other companies that weren't able to get a lead term sheet.
100.
Yeah, and so, and I'm sure like with BITSO especially, given like the industry you guys are in, like there's even that investor pool gets even tougher, right?
Oh, yeah.
But it's interesting you mentioned that, because if you compare 10 years ago, now it's much easier because it's better structured, because you have the different categories. A lot of liquidity went to this, so it's evolving. But I understand that to convey the stories, but even from an outside perspective, you've seen an evolution that is huge. Today, I'm C, I'm D, I'm B. Why you're that? Because there's a market behind this that it's organized to go there. Now you have more competition, and you have but still, I talk with a lot of entrepreneurs, and really it's very painful journey. But today, with the right tools, I think it's improving a lot, that access to capital. Even banks are starting to have initiatives towards that segment. So I was reading 2 weeks ago, BBVA in Mexico launching a Spark, which is to fund Spark. Spark is the name. Okay. It's a new kind of line for venture capital. So it's growing towards that direction. And I think particularly in Mexico, you were mentioning corporate venture. This is really new. In the past, it used to be the owner saying, "Okay, I know the guy. Here you go." Right? Definitely. Now they have teams. So no, but I think that from that perspective, I see it evolving very quickly. The other thing it requires, it's a lot of understanding on the entrepreneur, on the how to, right? Because investors here, it's a mix of what we are, but investors are investors, and eventually, if it's a B, they will ask for this, and that. If you don't convey that exactly, not going to happen. So that's a combination, but that is also evolving very, very quickly. Now you talk to an entrepreneur, and they will talk about EBITDA and cash flow. And
you're welcome, by the way. We've been training them. We've been training them for the last 6 years.
But it's really. You can feel that.
Yeah, it's
that progress, right? Sorry, I interrupted. I was having this discussion last week with an entrepreneur precisely. I said, "Hey, in your presentation, there's not this, not that, not that." Yeah. And the manual says that the B investors need this, and that, right? So it's evolving, I think, very quickly.
Yeah, I think if you look at someone as an example for QED, like I guess a good question would be like, how many of the companies that pitch you do you say yes to on a percentage basis?
Success rate.
Very like an actual dollar investment.
Yeah.
Very, very, very.
Like percentage.
Less than 1%.
Oh, so you're breaking a lot of hearts.
That's a good way to.
Well, I mean, keep in mind, we see basically all the deal flow in fintech globally.
Yeah.
So it's very low percentage.
I think there's one thing I want to touch on is like when you're raising money, depending on the type of company you are, there's different types of investors for different types of company broadly throughout the VC landscape.
Correct.
Right? And so especially in fintech, if you start getting into having any sort of balance sheet, that becomes a very particular set of investors. Or if you're in crypto, as an example, there's like a certain set of investors. I think it's gotten pretty broad now, actually more broad than it was. A certain set of investors, and then as you said, stage 2, right? If you go, and even within a firm. So I think if you go pitch the wrong partner at a firm, the wrong company, you could get a no when you could have gotten a yes from a different partner who understands your vertical and understands the stage of your company.
Definitely.
And so it's super important during the process of raising venture capital that you take the time to understand who you're speaking to, why you're pitching them, are they going to understand your business, and then just expect a lot of those. Yeah.
Completely. I mean, stage matters quite a bit. And to that end, what is the role? What is your take on the role of private equity in further developing this ecosystem and tackling these problems that we've already talked about? I'm sure there's a long list of
I think the obvious way is seeing us as the exit for the investors that when the business matures. That's the obvious part of it. But at that moment, probably the entrepreneur or the early stage investor is already somehow relieved of he went to the black numbers. But again, an investor like you guys, you expect 40s, 50s, 60s, 100% returns.
More.
What we expect is
we talk about X's.
Yeah, exactly.
5, 46, 7X.
If we get 2, it's great.
It's great.
So,
but it's much later, and the downside is
the risk is
that's the risk. Exactly that. But then in X is the way to see it, right? When you can get to the private equity for exit or for further investment, right? It's
for me, it was a steep learning curve just to understand what are the drivers, right? We've raised some capital or venture debt and growth equity in my last company, venture capital, angels, and I think understanding the return profile, when are they coming in, what are they looking for in return, how hands-on are they, and speaking their language. That is a hard thing to learn as an entrepreneur because I didn't traditionally come from banking.
Right.
I didn't come from investment banking or private equity. They all have different motivations, and you have to speak to their egos at times and also to their ultimate return because they're managing other people's money professionally. So that's a really important place to be. And if you don't speak their language, it's going to be an immediate pass.
Right, it's much more than they have money and I want some of that.
Yeah.
There's a whole thesis around that and understanding their
like you said, the right person, the right timing. I think one thing that I just never knew was the fund cycle. Do they have dry powder? You could talk to the perfect fund, the perfect partner at the perfect fund at the right time for you, and they're just raising their next fund. Not everyone can raise $1 billion QED size fund. Other people are out there hustling, trying to get the next fund, and your poor timing could be something that you don't even foresee or know unless you ask those questions. Timing is important, and just asking other people. One of the things that I benefit from personally is talking to other entrepreneurs because it's a lonely game. It's hard.
It is.
You get a lot of no's. Your wife or spouse doesn't want to hear it.
No.
There's enough problems at home. But when you talk to other entrepreneurs, you say, okay, I'm not the only one going through this, or, oh, you had a good experience with this fund, you should talk to this partner in particular. I think I didn't learn that till later in my sort of startup journey, that you really have to lean on other entrepreneurs and don't be afraid to ask questions. And I'm maybe more of an open book about certain things and sharing the good and the bad.
That's a really good point, and there's no reason not to do that. That's one of the things that I've always been very impressed about the ecosystem in Brazil. Mm-hmm. It's super close. All the entrepreneurs get together. Silicon Valley is the same. Mexico is getting there, but it's not quite there.
A little more closed.
There's a lot of room. We try to foster that type of contact, but the other side of the equation is true. All your peers in PE.
Yeah.
VCs know, and everybody talks, right? Like there's no reason not to build those networks and actually create the virtual cycles within each one of the tiers.
But also one of the reasons why in Mexico it's just starting is because the change is very, very recent as well. Like you touched a bit upon what happened in COVID. You also talked about the evolution. But the reality is, if we go back to pre-COVID, basically the VC world was non-existent in Mexico.
Right.
Like you had a few local VCs who were like very much of sharky behavior, and they were like very aggressive. They were taking advantage of entrepreneurs. Like entrepreneurs had no other alternative because it was very hard to tap into investors across the border. It was it was very hard to want to be an entrepreneur because the lack of access to capital made it very hard to get the right incentives to go and quit your job and go and that. So I think like what happened in COVID is that capital became global. All of a sudden, from the comfort of your own home, you could pitch to 12 VCs and like on the same day.
In one day.
And the next day, another 12. Whereas before, you alluded to this, you had to go to SF or to New York and do a roadshow, and then you probably got 4 meetings, and it was very hard because like their time was also limited, and you didn't see the VCs coming to Mexico or Peru or Colombia or like Chile, right? So like I think that it became like a virtuous cycle where more capital started flowing in, then more talented individuals start realizing that they could actually develop a lot of these projects, and then it was worth developing the project.
Correct.
So they started quitting their jobs, and we started seeing like all this like innate talent that was stuck behind like a desk and like going from 9 to 5 jobs that were actually like pretty smart and had like all of these solutions for these problems. Say, okay, I'm gonna venture, I'm gonna finally like take the chance and try this. And then as capital flew in and talent started flowing in, like the virtual cycle started growing, and then valuations started coming in. There was a bubble, and it went, the pendulum swung too far. But the reality is that that started fostering the talent ecosystem, and now you start getting the network. Because before, it was very lonely, because there were not a lot of people who were like actually were venturing into this, because it was very hard. And now, the more companies you have, the more people that wanna like try and attempt at being part of the ecosystem, and then you start building a very robust network of entrepreneurs that actually rely on each other and make it simpler for the next entrepreneur in line.
I agree, and I think you touched on something that is critical, which is the quality of talent, right? Like up until the bubble, it was really hard to find people who were willing to take the risk, right? The bubble started creating this aspiration of like it actually makes sense for me to take a pay cut or to work for less, for the expectation to, one, do something that I really enjoy, and two, potentially benefit significantly with equity, right? Like, which is an equation that Silicon Valley understands very well. Thanks to Stone and Nubank, Brazil is starting to understand, because there's been plenty of millionaires already happening, and it's starting to happen here, right? Like, and that's attracting talent, and it's making people willing to align with the investors, because at the end of the day, we are taking the same bet, right? Like we're investing in you, we're taking the risk, and having the entrepreneurs, having the founders take that same risk aligns everybody, right? Like that's a really.
But this it's very interesting. Last week I'm part of giving some classes for postgraduate young people, postgraduate. It's they maybe 25, 27. It's unbelievable how they know the names and the stories of the kebabs of the world now in Mexico, and that is examples that for them now this ecosystem exists.
Yeah.
For us, 10 years ago, it didn't exist. It was like, so it's another piece. What happened in the last 4 years maybe, it's really, I think it's having a lot of impact in things that will make it stronger. And it's knowledge, it's, people knowing. So this talent, now their models is things like that.
Yeah, I mean, sorry, go ahead.
There's a cost of opportunity for those young people to go into a traditional job now, because whereas before, like someone who was brilliant would would be so eager to go into a consulting job probably, and all due respect to the consultants. Like now, like there's so many different avenues of places where they can get challenged, learn a lot, they can get the upside and the equity, they can have fun, and they can truly believe in the mission. Like I think one thing that really makes all of these companies like stand apart from the bunch is that the missions are so powerful, because it's not easy to risk everything for something, right? Like it's not all these entrepreneurs who are crazy enough and thankfully are now talented enough, like they have to be extremely passionate about the problem and the solution. And that makes the missions themselves be have so much weight into everything on how the businesses are driven. So it's no longer like a very traditional company where the only aim is generating revenue. These entrepreneurs really want to change the world. They really want to change the impact. So like all these young generations of talent that are flowing in from schools, now you can offer them the chance to actually go and change the world, have fun at it, get the upside, and actually learn a bunch while at it. Because like also cycles, like the cycle of these companies of growth, it's super accelerated compared to a traditional company's cycle. So in 2 years, the amount of change and challenges and solutions and extraneous circumstances that teams go through, it's a very wide variety and very exciting. Crazy at times, but very exciting. So
at times crazy, or everyday crazy.
Yeah.
I think you mentioned something really important, which is like what venture capital allows you to do as an operator is invest in the future earlier, right? And so where if you're running a traditional business, you need positive cash flow in order to fund the next day, right? Where if you take venture dollars, you can invest in the future and burn money essentially earlier on in order to reach that later. And I think like the big things that we're all chasing, and obviously what you guys are doing, like those aren't static problems that like no one's going after, right? So if you're trying to tackle that problem without additional capital and you're going up against companies that do, like you're at an inherent disadvantage, right? And of course this went too far. I think like SoftBank's a great example of like where too much money like maybe is a problem.
Yeah.
But being able to pour gas on the fire that's working, like it gives you a strategic advantage over a competitor that doesn't have access to capital.
And test, right? Test different things and have sort of the time. I think you need time to test out and parse out what's working, what's not. Take some risks, whereas you're not going to take a risk if your mortgage is tied to it or your own personal savings.
Yeah, or if you just can't pay salaries the next day, right? Like it just doesn't work. Yeah, I think.
So we'll have to wrap this up, but before we wrap it up and open it up for questions from the audience, to me it's very clear that just based on what we heard and the fact that most of your businesses and the businesses that we've talked about here would not have happened had it not been for venture capital. I'll take it as yes, venture capital even in Mexico, but true also for the US and Canada, is uncovering unprecedented opportunities. The question is, what does the future look like? Are you optimistic about the future? Are you cautious? And keep in mind that we're right now in a winter. You're in a crypto winter, but we're also in a macroeconomical winter in funding, right? 40% down from last year. What's going to happen? What is your best take, Hayden?
Yeah, so we just finished raising a round that we haven't announced. It was the hardest round that I ever had to raise. Like we had really good numbers, and we raised at a valuation that was okay, but like it would have been probably three times higher 8 months ago. But I think the one thing that we're seeing is that the companies that weren't great companies, that were okay companies that raised money, are no longer able to raise money at all. And so what we're seeing is advertising costs come down. We're seeing the cost of talent come down. It was like, I'm sure as you guys know, like the wages were crazy for hiring engineering, as an example, right? And so I think I'm really bullish on that. Like really great companies are built in downturns, not because of the downturn itself, but because of the focus and density of talent at the best companies. And because at the end of the day, your people are what make your company. I don't think venture capital is going to go to zero, right? Like, I mean, there's big funds. I think there's a lot of
hopefully not.
Well, no, yeah. I think there's a lot of talk about dry powder. I think like if you understand actually how that works, that's like probably a bit overstated in terms of how that money actually flows. But I'm really positive about it.
Thank you.
Yeah. So on every market there's corrections, and right now we're in a correction. That's all that it is. Like the money's still there. The capital still needs to be deployed. Like you're an example of that. Like you raised this humongous fund like last year or earlier this year, and it still needs to be deployed. The only difference, and all of these funds that were able to raise those funds from their LPs, they still have to go and get the returns. The only difference now is that they're going to be more careful at it. And I think that we needed to see this correction. We need to see the companies feel the fear. I think that we need to see the companies we need to be more disciplined, because the way that the ecosystem was being managed, it not only enabled companies, but I think that it pushed us to the edge to do things that were like on the edge of irresponsible. And I think that right now, all of these correction, what it is making is go back to fundamentals, think of profitability, focus on getting the right talent, don't overhire, reduce crazy expenses, don't burn money acquiring users, focus on your unit economics. And I think what's going to happen in the next few months or years, I think now all the companies that knew how to actually make these corrections right now are going to be the ones who are going to be benefited from the capital that still needs to be allocated, and they're going to get catapulted into the next stage. So I do think that I see that the future is bright. I think that in my line of work, we always need to be positive, because if not, like, we would get carried away, because like
no
the cycles are very strong. The cycles are very strong, for sure. And I just want to give a very brief example, because if it weren't for venture capital, and that's why I'm really bullish that it's going to continue fostering a lot of these marketplaces or industries, or like how we change their lives. Like, for example, in BITSO, we're doing today close to 7% of the U.S. to Mexico remittances. The U.S. to Mexico remittances, that's the largest quarter in the world, with over $50 billion exchanged every year. The way that we're doing our product, the way that we're going into the end user, is that we're actually doing immediate transfers that that cost around 5 basis points on send a transfer, versus like probably 20% that a remitter charges the users. So we're trying to bring the value to the end user, and that we can do that because of venture capital. Like, that's one of the reasons that we got to like almost influence close to 10% of the people who are sending money for their families to eat, is because of venture capital. So I'm very bullish that this is just a correction, and we're going to continue changing the lives of many people in the years to come.
For the better. Excellent.
Real simple answer from an entrepreneur's perspective. I think it's just survival of the fittest, and that the sort of tourist entrepreneur who came along and said opportunistically, I'm going to start a company, a lot of money out there, doesn't like their banking or consulting job, want to start something new. It's getting too hot in the kitchen and they're ready to get out. So that's one thought. The other is, I think it's about labor. And for us, we've noticed on a smaller scale about a 500% increase in applications for every job we post. So there's a lot of really talented people on the sideline looking for a mission-driven company. And I do believe, like the Airbnbs, the Ubers of the world, 2008, 2010, there's a reason why they grew so well and they had the right fundamentals. I think time will tell, but the next wave of great companies are being built as we speak.
Are being built right now.
Yeah.
Right now.
For sure.
On my end, I think it's only a winter, spring is around the corner, right? So, and because the basis of this, and particularly here, is what you were mentioning. It's addressing situations that can create markets. And not only that, it's very nice to say, but it already happened.
Yeah,
right?
we've
So
seen this movie.
now it already happened. A crisis like this in 19, maybe this discussion wouldn't be happening now. So that's why I'm convinced that capital, is there. It's also true that, and again, we're not actively investing now in Mexico in this market space, but we talk a lot with entrepreneurs. And
are we convincing you to invest in Mexico now?
Maybe start thinking about that.
But a year ago, when you had discussions with entrepreneurs, you say, wow, I did this capital raise 2 months ago, and now I'm worth 3 times. It was that dynamic also. I'm not saying it was incorrect,
right,
but that dynamic was there. So I think you mentioned this, and it's, okay, let's be cost, cost is a cost. I cannot be forever cash burning. I need to so these concepts are now will be part now of the mindset of the entrepreneurs.
So this cycle is training entrepreneurs to be better entrepreneurs, to understand, especially the younger ones or the newer ones, right? Like they're understanding the full cycle, right? Like and many companies are now striving to become profitable, and they're doing a lot of things that they were not doing before, and that's developing better skills and creating better companies. And frankly, it's also training a lot of investment community, right? Like especially a lot of these funds that came in to the market 2-3 years ago, they only saw a bull market. Now it's not, and they're learning to be investors, good investors in this kind of economy, right? So
definitely,
I tend to agree. I think I'm cautiously optimistic, more optimistic than cautious, but I think this is for the better. There's going to be better companies coming through this wave. And I can't wait to see all these problems that we talk about really solve, which is ultimately the reason I think most of us are in this market. Thank you so much. It's been a fantastic conversation. Thank you for taking the time. Thank you for those of you who flew in here. It's been great. Thank you.
Appreciate it.
Thank you. Thanks.
So I don't know how we're doing with time, but happy to take questions.
Just in time. Perfect timing.
Pretty good timing. Yeah, happy to take questions. You said 15 minutes? Or
5 minutes.
5 minutes?
Yeah.
All right, any questions?
Yeah. And this is more like just talking broad strokes about, but can you talk a little bit on the political current landscape, predominantly in Mexico and emerging markets, and how ECs look at potential risks in such markets? And clearly, I mean, there's more protectionism going on, and you guys are funding projects that are in Latin America. Can you guys talk a little bit about how your guys' perspective is political outlook right now?
Yeah, I mean, I can take that question since I'm the only VC here. Listen, at the end of the day, it's a long-term play, right? It's a long-term bet. 10 years is sort of the normal outlook for any given fund. We believe that in 10 years, many things will kind of fall into place. We believe that we're agents of change in making things kind of fall into place. I talk about, for example, Koru, right, which is solving a problem of financial literacy and education, financial education, which will typically be in the hands of government, but we're taking it kind of private and we're taking a stab at that with technology, right? So my take is we don't worry too much about the short term. We look at this more on the kind of long-term outlook, but we do see all these changes clearly here in Mexico, Brazil, Colombia, Peru. I mean, it's a complicated context, but we are well informed on like what some people may think. We're well informed of what is going on. We actually have very good relationships with the regulators to the extent that we can. We help with that, but we're going long on these investments.
It also seems like there's been a critical mass, like in the last 3 years in particular, where as we said, 2010, 2012, 2015, now it kind of has all this massive tens of billions of dollars has kind of de-risked these investments for the next one, and that matters, you know, for the more casual institutional investor to see that QED has blazed the path, or you know, Andreessen Horowitz and others here. It sort of validates the market in some ways.
Yeah.
And I think it's interesting that in Mexico, 80% of the market is in private hands. Let's put it this way, right? Purely regulated sectors, or in the hands of government, it's 20%. Then you have regulation for a number of sectors. So I think that's an interesting way to see it, because while you are, you will be always a very strong counterpart with, you know, regulations changes and so on, because, you know, the sectors are in private hands. That when you add to the needs that governments in the region have, which is very, very strong in you know, in basic things, education, you were mentioning healthcare. So what we've seen is cooperation, really, because it's a need that they cannot cover, right? That's particularly true in obvious industries. It's less obvious for the regulator in new things you're creating, you're bringing to the table. But I think this concept of they cannot cover that need and you offering a solution, it's in our experience, it works, right? Yeah. It's not easy, but it works.
Also, one more thing, like, it's money flowing in, the reality. So, like, governments, regardless of their political stance or their social ideas, like, they love foreign investment because it's money, and they need foreign investment that it comes to the countries. So, like, from our perspective, like, regardless of the, like, regulation becomes harder, and some governments are very idealistic, particularly in the industry that I operate, but they all love foreign investment. So, like, it ends up being a very, like, protected somehow a part of the ecosystem where they're very open to keep on fostering this from coming in.
Thank you. We probably have no more time?
No more
okay.
time.
Thank
you. Thank you so much, everyone, for coming.
We'll be around.
And thank you, QED, for being such a great partner for the US Mexico Foundation and for the North Capital Forum. Thank you.
Thank you for having us.
Thank you.